The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, good afternoon. This is Mitch Piper, National Membership Director here at ASCPS, and today we are going to be doing your January member webinar. So today we have Bill Nemeth back again. He's going to be talking about the additional uses of IRS transcripts. But before we get started, just a couple of announcements, I guess. The first is there's going to be 2 polling questions, and you have to answer both of them. Bill has agreed to announce them for you, so there should be no reason why you don't know about them. So second, handouts are in the GoToWebinar panel. If you didn't get the email with them in there, you can download them right off of GoToWebinar. And then the certificates I will have out to you by Friday. So, and just so everybody knows, we are going to be doing in the past we've only done about 8 webinars a year. We're actually going to be switching. We're probably going to be doing 1 every month. So there will be some during tax season for sure. But just so you know, if you can't make them, if you're too busy, they're always recorded and in the webinar archive on the website. So you can listen to them anytime you want and as many times as you want. But that's it. Pretty short announcement list today. And Bill, when you're ready, you can get started.
Very good, Mitch. Thank you very much. Delighted to be here today. The world needs people who live and work in tax transcripts. They are kind of a geeky world to themselves, but some of the stuff I've discovered I wanted to share with you guys. So that's the purpose of today's webinar. And as we're talking, I think you'll see that you can monetize some of the things we're going to talk about and make yourself much, much more valuable to your clients. First thing I wanted to start with is, how do you get transcripts? Well, either an 8821 or a 2848's got to be on file with the CAF unit. You can call PPS, go through oral disclosure, request transcripts to be faxed or mailed. A lot of the old-timers do it that way. E-services, which IRS introduced in 2004, is kind of cool. You don't have to talk to anybody. You can pull the transcripts electronically using the IRS transmit delivery system. Anybody that's used that know that it is clunky and primitive and takes quite a while. Or the third way, which is the one we think everybody should use a commercially available software to automatically pull the transcripts, download them, and analyze them via IRS transcript delivery system. So the net of it is it's easy to pull transcripts, but the more important part is having a tool to analyze them. And today there is commercially available software to do that. I happen to use Tax Help software, and I know there's some other alternatives, but you'll be seeing it from a Tax Help software perspective today. Here is my comparison. If you look on the left, you'll see the lawnmower, push lawnmower. That's how people calling PPS and fax the transcripts. That's kind of the mode they're operating in. On the right, you see a large automated lawnmower with an air-conditioned cab. That's e-services with software. So on the one, you don't even break a sweat. On the other one, you have to work for everything you get. Do want to remind you guys that the IRS thinks they have been compromised on e-services. So in fact, they published a memo late last year saying everybody is going to have to revalidate. We are going to two-factor authentication, and what that is, when you, in the future, when you sign into e-services, you're then going to be sent a text message to your phone. You'll have to enter that to go forward. We all think it's a great idea, but remember to validate your identity with e-services. There is something that you'll see on the IRS website, important update about your e-services account. And right now, we're kind of on borrowed time. Any day now, the IRS can flip the switch and go to two-factor authentication. And if you haven't verified your identity, you're going to be stuck calling PPS, faxing in your POA, and so on. So very, very important.
Hey, Bill. Hey, sorry to interrupt. Just wanted, when you were talking about that, Roger actually did I think an hour or 2-hour webinar on the whole e-services switchover and everything. So if anybody's having trouble logging into e-services or anything like that, go check out the webinar archive because, like I said, he did a whole webinar on it. So All right.
It's very important. Yep, I am identified, and so I'm ready when they flip the switch. Now I wanted to talk about a real-world situation. You're supporting a traditional tax pro who doesn't use e-services. He has 2848 POA. You know how to use e-services. You need transcripts. He has POA. He doesn't think you need transcripts, so he's not going to sign another POA with you on it. Very simple solution. Execute an 8821. It doesn't affect his POA, but now you can use e-services to pull everything you need. And the next slide shows how it works. A new 2848 trumps an existing 2848. New 8821 trumps an existing 8821. However, a new 8821 does not affect an existing 2848. New 2848 does not affect an 8821. So you can go in there and have a good time without having any problems and get all the information you need quickly. We're going to talk today about many ways the transcripts can be used, and we've got a whole list here. You can check for compliance. Did the taxpayer file all required returns? Confirm the balances per year. Can confirm payments are being properly applied to the years that you want them applied to. You can confirm estimated tax payments even to the current year, 2017. You can find lost retirement accounts by looking at the Form 5498s. You can develop basis and Roth IRAs and Roth conversions, which you may have to do to resolve CP2000s. You can check for required RMDs for people over 70 and a half with retirement accounts. They have their required minimum distribution. CP2000, some of the mysterious ones coming out lately, the only way I can figure out what the heck to do is to pull the transcripts, see what happened, and then try to see how the IRS analyzed it and fix it. Also, CP2000, you can monitor the code 922 and analyze and amend it before the CP2000 letter is sent. Saves you time, energy, and embarrassment. Next page, you can monitor returns flagged for exam 420, and in fact, you can protect your client in that regime. We'll talk about a little bit more about that later. We can monitor returns where the exam is closed. You'll see a code 421. You can monitor installment agreement activity. You can see when you've put in an offer for a pending installment agreement. Transcripts actually tell you when it's accepted. You can monitor federal tax liens. With first-time abatement, you can find free money. You can monitor the 10-year collection statute, the CSED. Another interesting thing that is timely now, you can verify the name Social Security match or name EIN, especially important for those of you that are trying to do a zillion W-2s and 1099s before the 31st of January. Next thing, you can evaluate bankruptcy as a possible course of action. Next page, we can monitor payroll tax returns, 940s and 941s, and deposits to confirm returns are being filed and deposits are being made. You can actually help and sell this service to anyone that's doing payroll just to make sure everything is on the up and up and their payroll provider is really filing the returns and sending money in. This is something relatively new. Estate tax returns, almost all of them are audited, Form 706. And in fact, when the audit is over, the IRS, as of June 15th, said they're not going to issue an estate closing letter unless you ask for it. And they basically said, we want you to go into the transcripts and look for the closing code 421. And so this is another good application for transcripts. The IRS is actually moving the onus to us. We can also monitor for tax ID theft. Something here has changed remarkably that we noticed in early 17. IRS policy through the end of 2016, if an account is flagged for identity theft, transcripts could not be accessed through the transcript delivery system. Typically, you'll go and you'll ask for 25 transcripts for account transcripts, wage and income, and so on. In last year, if you tried that on an account with tax identity theft, your taxpayer got 40-plus identical letters stating that someone tried to access their account. You got a nasty call from your client, and you had to apologize and talk about how clunky the IRS system is. New policy, January 2017. Accounts flagged for ID theft can be accessed through transcript delivery system and all of the other programs that we use to pull transcripts without the taxpayer getting the 40-plus identical letters. Had one that I experimented with. They had tax ID theft in 2014. I can't pull that year, but I can pull 13, I can pull 15. So that has been very nice and well received. The other thing the IRS started to do this year is they are sending us copies of the CP01A, which has got that tax ID pin for folks that have tax identity theft, so that when your taxpayer comes in the middle of summer on extension and you say you have a identity theft flag on your account, do you have that letter from the IRS? And you get that, oh, I threw that away. I didn't think you'd need it. POAs are now getting copies of those letters. That helps a lot. Okay, now we're going to go into the specifics on how we're going to use transcripts, and I've got some graphics on these just to make it a little more interesting. We can confirm balances. We can verify the balances for each year correct. We can review existing SFRs, and we can look at when the tax debt is going to time out, looking at the collection statute expiration date. We'll also show you that, yes, SFRs do time out. Everybody in the world that you ask will say, no, they don't. And also, you want to look at, is it beneficial to submit an original return to reduce a balance due or get a refund? Likely, it's forfeited. When we're confirming balances, this is a screenshot here. We'll notice that we have balances here for 6 and 7. Collections were active in 12. I had pulled the transcripts in 14. You'll notice that 1997 and 2000 SFRs timed out after 10 years. Note that the liens were released as well. That is kind of cool. And here's the actual transcript itself. 2000 SFR was established 5/19/2003. You can kind of see the flurry of activity after the SFR is starting. And down here at the bottom, this is for 2000, you'll see that the write-off of the balance due occurred 5/20/2013, 10 years and 1 day later. And notice, automatically, about a month later, the tax lien was removed. So that is kind of cool. It made my taxpayer's day because I was monitoring this for 8 months and told him to be quiet, continue to file returns, and maybe it'll time out. It did. Next item, we can confirm payments are being correctly applied. Got a taxpayer right now. She was sending in $1,000 a month voluntary payments while she was setting up an installment agreement. Sometimes she would put her social on the payment. Sometimes she'd put her husband's. Guess what? Half her payments are missing. And it's beyond transcripts in this case. She actually is going to have to call the IRS with her proof of payment. She was doing it electronically. But had I known she was doing that, I would have found that with the first one that her payments weren't being applied. And notice that you want to verify that all payments are shown where you want them to be on the account transcripts. Here is a standard payment, credit, and abatement history. It shows on the left-hand side the tax year, the codes, and on the right-hand side the date and the amount of the payment. Payments are in red, balances are in black. So it's a good idea to monitor those payments. Make sure they're going where they do the most good. Typically, they will go to the oldest debt, not always the oldest tax year, depends. One of the neat things we can do in e-services, we can confirm estimated tax payments for the current year. In fact, we're in tax year 2017. The account transcripts for 2017 are showing any estimated tax payments for 2017. And interestingly enough, a taxpayer has the ability of going into IRS, get transcript. They cannot get access to the current year account transcript. So taxpayers cannot see their estimated taxes, whereas with e-services we can. And again, you can see that in this case, 2015 wasn't filed. It was showing $9,262 of estimated tax payments. and that obviously went away when we filed the return. Here's a clever one that I came upon by accident. We can find lost retirement accounts. Pull the wage and income transcripts, look for a very old mailing address on Form 5498, which is the summary of a retirement account, may not have had any activity in years. Likely the taxpayer's forgotten about the retirement account. Generally, these are IRAs. And in fact, you can tell the taxpayer that they may want to contact Fidelity or Vanguard or whatever and update their address. They've got money sitting out there in an account, and hopefully they've invested wisely. And it has, the one I saw, it actually tripled over 10 years. So whatever it's in, it's doing well. Here's another one that's interesting. We all know that nobody tells the taxpayer to put Roth contributions on their returns because it doesn't matter. It's tax-free. However, if a taxpayer receives a Roth distribution, doesn't include it on their return, IRS will send them a CP 2000. They deem it fully taxable unless the taxpayer can prove the basis of the distribution.
Oh, it's all through ASCPS.
Well, and so developing the basis, Roth IRAs were originated in 1998. If they received a Roth distribution and it's not included on the return, the IRS deems it fully taxable. Here's a little bit of background to help you out. If you know what the current balances are at 2006 forward, we can see that today. You know what the numbers were maximum prior to that amount. You can kind of use a little Kentucky windage to pretty well estimate what the Roth basis is over time. I've done this and have been very successful. Next, you can check for required minimum distributions. Again, you can look at the 5498s for 2016. Those will be in the transcripts in the middle of summer, and you might say, gee, why does it take so long? The answer is IRA contributions can be made through 415. The fiduciaries wait until they get all of that in. They then finalize their 5498 showing everything including the contribution for 2016, and they publish it. It is possible for some folks that have a whole lot of IRAs. I've seen this where people have, like 20 different mutual funds. They'll get a 5498 for each one. You can pull last year's wage and income as an HTML file, download it, import it into Excel, and facilitate the analysis of the retirement account, the 5498s, pull everything out into a column, sum it up, and then use the equation as to what percent the required minimum distribution is for that year. For CP 2000s, properly analyze and respond. I have found that it's almost mandatory to pull the IRS transcripts just to make sure you understand what's happening. We were looking at one this morning. Guy's a W-2 employee, makes $100,000 a year. He did some additional outside work at his employer. The employer gave him a 1099 miscellaneous for $40,000. And the IRS flagged it as a CP 2000, said, you owe full self-employment tax on that $40,000, but in fact, that year he had $100,000 of W-2. It was $122,000 or $118,000 is the max Social Security. So in fact, he's only going to have to pay full boat Social Security on the other $22,000. IRS CP 2000 has him paying it on the entire $40,000. So absolutely wrong. Had another one where taxpayer was issued a W-2 and a corrected CP 2000 showed both of them. It was only the transcripts that showed that one was corrected on the other. Interestingly enough, you can monitor the transcripts for the CP 2000 code 922. You can actually look at that, and it is actually there several months to 9 months before the actual notice is sent. It is possible to see it, amend it, and fix the issue before the IRS sends a notice, saving penalties and some interest. And here really is the time diagram to show you why that's true. Here is the 2016 tax year. that wage and income is just beginning, pardon me, I said that wrong. 2015 wage and income was finished at the end of 16. And so the 2015 wage and income populated all through last calendar year, all through 16. In 17, in January and February, the IRS runs their matching report to see if there is an income discrepancy from what's on the return. About June through October, they start sending out the CP 2000 letters. So if you go into this never, never land, kind of like the February, March, and April of 2017, we'll actually see the 2015 returns that have been flagged for CP 2000s. We can go into those returns. We can see what the problem is. We can voluntarily fix them. You're probably going to save some money, and you're going to save the embarrassment, because no matter whose problem it was, taxpayer always assumes that the preparer screwed up. About a month ago, I gave a webinar for ASPPS, Strategies to Reduce and Eliminate the CP 2000 Notices. That is available, and a number of people have watched it. Good stuff to have, and in fact, we're all going to start seeing those flags for CP 2000s for 2015 probably in the next 3 months. If you monitor them, and you can do that with commercially available software today, you can fix it before it happens. Here's the other one that you can actually monetize. Look for the exam code 420. That code generally is going to be in the transcripts, and return is flagged for audit up to 18 months before the audit letter is sent. And so, in fact, if you see one of these, or if you have a TurboTax guy come to you and you happen to have him under power of attorney or 8821, you can start monitoring his account. And in fact, if you see a 420 flag, you may want to look at the account. You can probably voluntarily fix it with an amended return and a mea culpa that, the guy didn't know that his commuting mileage wasn't deductible or whatever. What it does is get you out of a full-fledged audit where you may have found out that he really fudged his charitable contributions and his medical were fantasy and so on. So bottom line, win-win for everybody concerned. What I'm finding with people whose audits I've done, I continue to audit the years ensuing, and in fact, they're willing to pay me for that peace of mind to know that they're not being audited for the following years. It really plays well. And so at the end of the day, I often joke that in representation, what I'm doing is selling a sound night's sleep, and this is just one of the ways we talk about that. Here is what the 420 code is going to look like. You see down here, the 420 was issued on 10/31/14, and in fact, this one, it was closed about a year later. This was great. It was one of my lesser liked clients who had been audited in prior years. They got him for about 40 grand total for a couple years before this. This is indicative of what we see here with budget cuts. IRS opened it for audit, didn't send any letters. We were watching it the whole time, and you can be sure his current returns were pristine because we knew there was a audit flag out there. And in fact, I was monitoring it, saw the audit was closed. Thank God for IRS budget cuts. You can monitor installment agreements. We all know how much fun it is to call collections and be on hold for 2 hours, sometimes getting courtesy disconnects a whole 10 yards. Here was a scenario: taxpayer broke his existing installment agreement, 68 grand plus penalties and interest. So I go through a 433 on the phone to see if they're going to accept our direct debit account. Wait 6 weeks, finally call back in, and they say, oh yeah, we're ready to go. I then looked at the transcripts and noticed that the transcripts showed the agreement was approved 6 days later. So in fact, if you're dealing with trying to establish installment agreements, take a look at the transcripts. The answer may be there. You can monitor tax liens. There is a poll question open now, so those of you that are not watching with both eyes, perhaps doing emails and so on. There is a poll question open. Going forward, scenario, taxpayers in the financial services industry has existing liens from years ago. Another tax lien puts him out of business. It turns out the guys that sell insurance, their newer contracts actually have a clause in there, a tax lien will nullify your contract. So in fact, we see tax lien shown in the account transcript several weeks before the taxpayer gets the lien letter. It gives us a head start toward negotiating with the revenue officer, threatening CDP and all other kinds of things, just to make sure that never gets issued. Again, this is value add. First time abatement, great marketing tool. Personally, I've abated over $100K in penalties for my clients over the past 2 years. I often say to a client when he's saying, well, you know, why should I use you? And part of my closing argument is I use some very sophisticated software that in fact will pull your transcripts and identify opportunities where I can find free money hidden in your account transcripts. The first-time abatement is an administrative procedure established in 2001 to reward good taxpayer behavior. Here's the quick conditions for first-time abatement. Taxpayers compliant, filed all required returns, owes and is an existing installment agreement, or he has no balances outstanding, and so you can get a refund subject to the standard 6511 rules, which is any payments he's made outside W-2 withholding up to the amount of the abatement amount made in the last 2 years are eligible for refund. And finally, the biggie, the prior 3 years of 1040s are clean. No failure to file code 166, no failure to pay 276. And this is what it would look like in a graphical presentation as Tax Help software would show it to you. You see that 2007, taxpayer filed an original after an SFR, but he filed late. He had 4,300, a failure to file, 2,400, a failure to pay. But the prior 3 years, he was very pristine. He had no penalties. He is eligible for first-time abatement. And on a call under power of attorney, you can call in and say, hi, I'm calling to see if my taxpayer qualifies for first-time abatement for tax year 2007 in the amount of, in this case, it was about $7 grand. And typically they'll pull it up, they'll look at it, say, let me put you on hold. They'll come back and they'll say, yes, he does qualify. You'll be getting a letter 3503 in the mail. And it's either going to be applied to their existing balance or they're going to get a refund. Had one of these for 15 grand. They actually paid off the 10 grand he owed them and sent him a check for $5,000. That guy couldn't write me a check fast enough. First-time abatement pointers. I've been doing this long enough that I've made most of the mistakes. IRS collections gives you the best deal on first-time abatement. I've gotten 14 to 15 grand FTA on phone calls. PPS, the best I've done on first-time abatement, just under 10 grand, 9.9K. Be aware the IRS about 1.5 years ago established a penalty abatement hotline. Net, it's a waste of time. People that answer that line don't know how to spell first-time abatement, and they can only abate up to $1,000. So my thoughts are it looked like a good idea, did not pan out well at all. Another thing that is always useful to our clients, we can monitor the CSED, that 10-year collection statute. Little background, Congress authorized the IRS to collect tax debts. They have 10 years to do it. The last time they changed that was in 1990 when it used to be 6 years. So by congressional action, they changed that. And just as a point of historic reference, in 1990, there were 6 reading rooms around the United States where tax professionals could inspect offers in compromise that were accepted. There were that few of them. In 1990, they opened the floodgates, and it's only at that point that offers in compromise began to go mainstream, and now, as we know, it's a real business activity. You've also got to be aware if you're looking at transcripts or if you're using transcript analysis software, the clock stops when the taxpayer stops collection activity. The following toll the statute. That's an IRS phrase. In English, it stops the collection clock. OICs, CDPs, collection due process hearings, bankruptcies, taxpayers out of the country for more than 6 months, or if you apply for innocent spouse relief. So all of those are pretty important. Here is, again, my slide. I thought it bared repeating. The 2000 SFR established 5/19/2003, timed out 10 years and 1 day later, 5/20 of 13, tax lien went away again right after that. So this really does happen. You can get into philosophic arguments all day long with people who have a master's in taxation that an SFR never times out. I shake my head and said, I know that and you know that, but the IRS after 10 years will write it off. So I'll go with the pragmatic answer. I like the IRS policy. And as we look at transcripts, sometimes it's better to do nothing, wait for the 10-year statute to zero out the tax. Year ago, I watched $250,000 of 2001 tax debt fall off summer of 15. Taxpayer was pleased. He was getting married. He was trying to get his life back together, and he got compromised. It wasn't his income in 2001, but he was stuck with it under his social. It just sat out there and festered, went away. He got married. Hopefully he's going to live happily ever after. Here's something that is really cool, and you can do it with e-services or you can do it with tax help software. Anyone with access to e-services can verify the last name social match. You really don't need a 2848 or an 8821. All you have to do, sign in the e-services, select online transcript request option, select account transcript, put in the last name of the taxpayer along with the SSN or the ITIN they gave you. If they match, everything is fine. What it'll say is you do not have CAF authority. If they don't match, this is the screen print you get. The information provided does not match IRS records. And it says, please correct the information provided and try again. This is always useful if you're doing tax returns and you have newlyweds and mom changed her name and you know in advance she probably didn't do it correctly. Rather than getting a reject that you have a name social mismatch, you can very quickly verify it in e-services, go back, use her prior name, see that it matches, and go forward. Also seen this happen where there are existing children, a couple gets married, the new husband adopts the child, gives him his last name. I saw that take 3 years for the name to finally come up correct. So this is just something to save you a little time without having to do any additional thing with the IRS. It works for taxpayers. It also works for business names and EINs, estate names and EINs, and nonprofits and EINs. We all know when somebody comes to us with an estate, they have a vague idea of what the number is, and they have a more vague idea of, is it the Johnny Jones estate, starting with THE, or is it the estate of Johnny Jones, whatever? This at least gives you a shortcut to figure out how to look forward on it. Next topic, bankruptcy as an option. Transcript analysis can show which tax years may be a candidate for bankruptcy, and notice that may is underlined and emphasized. The standard rules, timely filed returns 3 years from the due date. You want to be careful about doing careless extensions. You can actually change the bankruptcy availability date on a timely filed return. Audits 240 days after the tax is assessed, about 8 months. Late filed returns, the general rule is 2 years from when they were filed, but as we see with the flurry of activity in the tax courts, there is a whole lot of interpretation, and some courts will not allow a late filed return to be eligible for bankruptcy. Others will. That is a continuing topic and is rather fascinating to watch. Finally, SFRs. never eligible for bankruptcy. A return was not filed. Here is a really cool application, and I think anyone, any company that is doing payroll through a third party probably should hire somebody, a tax professional, using good analysis software to monitor the filing and the deposits to their payroll accounts to make sure everything is happening. This particular guy I took on kind of as a consulting client. You notice we have 941s over here on the left for 2015. Q3 and Q4, September and December, were not filed. Notice how much money he's paid on. This guy is one of these employee rental companies, so his balance sitting there is a little over $1 million. This is relatively, about a year-old kind of thing. And in fact, this guy has got internal payroll people that aren't very good. They call up the IRS without being the spokesperson and try to argue with the IRS. Those are relatively short conversations. I started pulling their transcripts and actually showing them that they did in fact have an option for some first-time abatements on failure to deposit, which is another very subtle kind of thing, and also try to keep them on the straight and narrow to show them what the hell is happening in terms of how their program is going. The net of it is transcripts, and more importantly, the transcript analysis, very, very powerful tools. No one ever wants to get audited, and I will announce that the poll is now open again for another question. I'll give you folks a moment to respond to that. We all agree no one ever wants to get audited. It happens. If you can tell your client that that 2014 return that he filed that was supposed to have the 3115 change of accounting principle thrown in there because he did have rental properties and he was supposed to scrub his depreciation schedule. He's been wondering now for a couple of years, is he going to get audited because he didn't follow the rules? You can look at the transcripts and say, it's clean. When you get within a year of the 3-year statute, the IRS very, very seldom is going to open a return with less than a year on it unless there's something really bad or there is criminal intent. If there's some overriding activity, they may. But for the normal things that we do, when you're into that 3rd year of the audit statute, you're probably home free. Neat thing, the transcript monitoring and analysis can give us an early warning, and more importantly, some of the software available today allows me to monitor 1,000 different clients. The software automatically pulls the transcripts for me once a week, gives me a summary report, and I can look at changes in the transcripts in the 1 week that has elapsed since the last time, and actually monitor, do I see any new audits? Do I see any new CP 2000 flags? Do I see any taxes falling off due to 10-year CSEDs or whatever? Do I see any new tax liens? Really a powerful tool. The other thing, payroll tax problems can create a nightmare. We all know that there are some unscrupulous payroll providers out there that basically stole the money and went off into the sunset. Doesn't matter, the taxpayer's company or the taxpayer is responsible for it. Transcript monitoring of the payroll transcripts can give us an early warning of problems. We can actually catch things before they really go to hell in a handbasket. And in fact, for anybody running payroll, that is a very good service to sell. And you can sell it for whatever you think it's worth. You can tell the owner of the business, I can guarantee you will sleep better at night knowing that your payroll is solid and in good shape. And with that, I'll finish about 10 minutes early so that we can entertain questions, and hope you found this informative.
Yeah, great, thanks. All right, we have a ton of questions, but first, there's a lot of people who are talking about the tax help software, and they were saying that their tax transcripts don't look like that. So that's tax help software. The website is taxhelpsoftware.com, and we actually have a free trial for Roger's software, and I put it in the chat. It's ASTPS trial. I'm assuming that's the only thing that you use for the tax transcripts, Bill?
Yeah, that's correct. And in the interest of full disclosure, Roger Nemeth is my son. I was one of the beta testers. I'm also the inspiration because I used to be the guy going through transcript faxes for hours. He looked at me and said, you know, there's got to be a better way. Computers are much better at pattern recognition. So I obviously was using Transcripts when it was available in the 2007 timeframe. For $100, it would pull the transcripts and print them out. You still had to go through them manually. Tax Help software pulls the transcripts, analyzes them, gives you all the information you need to be much, much more effective in your problem solving and resolution. And I have no financial interest whatsoever. I just think it makes us more effective as tax practitioners.
Yeah, and there's a bunch of people in here saying in the questions that they love it too. So just throwing that out there. But all right, so let's get into some questions here. There were quite a few about the first-time penalty abatement. So let's see. Actually, before we get to that, is there any way to see on the tax transcript if there's been a referral to make something criminal?
I have not been involved in any criminal cases. The only way I've been told is if two guys in suits with bulges in their suit pockets show up, it is likely criminal because special agents, armed agents, travel in pairs so that one can Mirandize you and the other one can act as a witness for anything the taxpayer is stupid enough to say.
Okay, cool. And so, and you were saying that Tax Help software automatically monitors the transcripts for you. You don't have to do it manually, right?
Absolutely. Net, there is the starter version for about $350 before discounts that you do individual taxpayers. You generate a 30-page report, and it's really kind of cool. I have my customers trained. They can read the report. I just tell them what page to look at. But the executive version actually in the background will pull transcripts for whomever of your customers you have tagged, and they'll pull them at whatever interval you want, whether it's 1 week, 2 weeks, a month, whatever, and we'll bring up that summary report, which is in real time. It's an Excel-like spreadsheet. You click at the top of every column, and it will sort it by, exam flags, CP 2000 flags, CSEDs, tax liens, whatever. It allows you to very quickly, once a week, kind of see where you are with your clients. And we all have our problem children. We're always looking there to see, are we going to make the CSED? Is collections going to stay dormant? We cross our fingers and hope.
All right, cool. So can you request first-time abatement more than once for the same taxpayer?
I have two funny stories. I called collections once upon a time, and the guy qualified for 2 different periods. And I had picked the bigger one, and the gal looked at it and said, yeah, he qualifies. And then she said, oh, and he qualifies for this other period. And I said, well, I want the first period. She said, no, you're going to get both periods. And I started to argue with her, and it was funny. She said, don't you tell me how to do my job. I've been trained on this. That was the $15,000 one, and far be it for me to argue too vigorously. So, number one, I have done it. Number two, as an experiment, 2 years ago, I did an FTA for a client, and just for the heck of it, I called 2 years later and said, wanted to see if my client qualifies for first-time abatement, and this was with PPS. They said, it appears that we've already granted it in the past. And I said, oh, a taxpayer must have called. But my opinion, when all else fails, give it a shot. The IRS is not really that familiar with FTA. Sometimes it'll work, sometimes it won't. And if you're calling collections, what you're doing is gambling 2 hours of your life on hold to see how effective you are. You probably know that they'll take 5 cases if you finally get through to collection. So I have them all stacked up on my desk, and when I get through, I'll go through the grievous collection ones, and then I'll start doing the first-time abatements. And they love it. It puts them in a great mood. That's the only time in the world collections can actually do something nice for somebody.
Okay. All right, cool. And there were a couple people who wanted to know, how do you go about charging for a first-time abatement? I am able to do it on contingency. Bottom line is I have a very liberal marketing program because I'm doing this more for background so I can help other tax practitioners as opposed to I know I'm going to make my next rent payment whether or not I get another client or not. So the net of it is this. Come sit down with me or we'll remotely do a 8821. Let's just see if you qualify, or if you do, we can do a 2848 so that I can call the IRS in your stead. I have sophisticated software that may show us that you have some free money in your back tax returns. I'm going to take it all the way back to 1990, and because we're interested in having a relationship, I'm going to go 3 years forward. We're in 2017 now, so I'm going to have my range of years 1990 to 2020, and I will have you sign that, get it back to me. I'll fax it to the IRS in about 10 days. When it's active, I will pull your transcripts, look at it. Here's my deal. If, in fact, you're going to get a refund, you will, on contingency, give me 20% of whatever money you get back. If you're in an installment agreement and I save you $10,000, you will pay me $1,000. That is my marketing policy. It is perfectly legal to do it on contingency, and it works out very well. I've never been stiffed. Oh, cool. All right, so we probably have time for maybe 1 or 2 more. I'm just reading through here, so hang on 1 second. We need another polling question just so that you can be kosher with the IRS. Oh yeah. Oh, hang on. Let's do 1 more. I'm the education chair for the Georgia Association of Enrolled Agents, so I know the rules very well. Good cut. All right, answer that while I'm looking for another one. Hang on. So do you get, I know you mentioned that you get a power of attorney on almost all of your clients, or? It's a condition of my engagement. I won't do anyone's tax return unless I have power of attorney. Okay. And the ones that don't want to sign a power of attorney, they're hiding something. I will see it. I'm good with that. And there is an asterisk. If the person seems unstable and they show up at our doorstep, I'll do an 8821 just to see what the heck is happening. I may not want to be the representative for that guy if he's unstable. And I've got a couple of them, and that's how I approached it. Because they want me to call the IRS and argue over a 5-year-old situation that is out of refund territory, that their preparer was dishonest. And there's nothing to argue. They probably were, but it's too late to do anything. Okay. Let's see. And, well, it looks like we're at 250. Someone was curious, how many tax returns do you do a year? I just looked up the number on my P10. I do 100 tax returns a year, 80 current year, 20 for the troubled clients that come in that haven't filed in this century. And so we catch them up the last 6 years. And then turns out the system will only take me back to returns from 2010 forward, but it's not unusual to do some of these way back into the early 2000s. I've done those as well. All right, last question. This is Jeff's question, so you can stop yelling at me in the chat. How can I tell if an S election has been accepted, or rejected?
An election for an S corporation election?
Yeah. Yeah.
I never looked at it. I'll have to pull my own transcripts. My company is a sub S. Don't know the answer to that, but I will pull my own transcripts and find out and get back to you.
All right. Cool. So I believe that's it. So we're all, I think we're all set. Like I said, the code for TaxHelp software, if you're interested in trying it out, go to taxhelpsoftware.com, and the ASTPS trial, all together, is the code that should get you a 14-day free trial if you're interested in trying that. Our next webinar will be February 23rd at 2 o'clock. And I know it's getting into tax season, so have fun, everybody. And if you run into any questions or anything, make sure remember you guys have your 4 free consultations if you're in silver, 6 if you're in gold. So if you need anything, just give us a call. All right. So thank you very much, Bill, and we'll see you guys all next month.
Okay. Have a good tax season, guys. Take care now. Bye-bye.
Yeah. Take care, everyone.
And people are hanging up, right?